What's going on, YouTube, man? Welcome back to another video. Today I am going to be showing you guys how to get your daily bias correct, at least, bro, 80% of the time. Now, honestly, bro, when you really get good at what I'm about to show you guys, bro, your daily bias should be at least right 90% of the time, bro. Know what I'm saying? Because daily bias is not that hard, bro, because you can always switch your bias throughout the day and all types of things, bro. Trading is universal, bro, so you could be a lot more flexible than you may think, and I'm going to be giving you guys pointers and showing you guys tips on how you can be as flexible as you should be in the market. Know what I'm saying? So if you're ready for this video, make sure you continue watching. Obviously, make sure you like the video, subscribe to the channel. Know what I'm saying? Let's get right into it. So the first thing that I have to show up here, well, let's look at the weekly chart first. Okay, yeah, right. The first thing that I want to make very, very clear and very, very important is daily bias has everything to do with the weekly objective, bro. You know what I'm saying? So in this case, this is our weekly candle. This is the week that we're in right now, right? And as you can see, what we did in the beginning of the week, we came down lower, taking out yet last week, previous week's low, right? And now what are we gonna target? Since price runs on liquidity and we took out sell side, now I'm looking for price to come back up and run buy side, or at least run previous week's high since we took out previous week's low, right? Now that's important for our weekly chart. That's really all we need for our weekly analysis right there. But now going into the daily chart, I just want to be very clear that I'm want to be bullish up until we hit this buy side. Okay, so I'm bullish on a daily chart right now. And one thing I would like to notice too, going into the day, mind you, everything that I'm saying right now is reasons of why I may be bullish or bearish in a single day. Okay, so right now I'm telling you that on a weekly chart we took out sell side in the beginning of the week. Now we're engaging buy side, and on the daily chart we got this new week opening gap. So we gapped up higher a lot. For me, that tells us that price is very bullish. A lot of people think that when we gap up, we're gonna hurry up and shoot down back into it, and that's not all the way true all the time. When we gap up like this, price can be very bullish, or vice versa. If we have a big gap down, price could be very bearish, like right here when this happened. So,
Love you.
no, you too. Um, so yeah. So with that being said, I have my buy side target here. We gapped up. We took out the sell side on a weekly chart. You know what I'm saying? So that is my bias for today. From all those reasons, I have a bullish bias. Okay. So going into the day, oh yeah, I'm gonna switch my chart. Going into the day, I want to be looking for price to show me that we want to run to those targets. You know what I'm saying? So hold on, let me do this real quick. Let me delete. What the hell? One second. All right. So going into this, okay, I have right here 9 o'clock. So going into every day, what I like to do is, since I know that I'm bullish, I want to go on the lower time frames like the 15-minute chart, and I want to mark up my highs and lows and all my PDRAs, right? So since I'm bullish and I want to see price go higher, I want to mark up my buy size. What buy size do we have in close proximity right here at 9 o'clock a.m. when 9:30 hasn't hit yet? Because if you look where your buy side and sell side liquidities before 9:30, it will help you a lot. So at 9 o'clock, I'm marking up where my buy side is at. We got a high right here. We got relative equal highs right there. We have last week's new week opening gap. This yellow rectangle, that's last week's new week opening gap. And we have highs up here. Off rip, I got like 5 buy side targets, bro. 5. Know what I'm saying? Probably more. So that's hinting to me that we possibly may go hit those targets. And another thing that I like to do, even though I do know that I'm bullish, I like to mark up my sell side targets too, just in case I'm wrong. So I don't never go in marrying a bias. Just because I'm bullish on the day does not mean that I can't switch my bias. So at the end of the day, I still have to mark up both sides of liquidity, buy side and sell side. So you got this low right here, and you got new day opening gap that could be filled in. And I want to see filled in eventually. You know what I'm saying? I think it's gonna happen tomorrow, but yeah. So we got our sell side right there. And what I'm looking for now that we got our sell side targets and our buy side targets, the important thing about daily biases, you have to know that for me, this is why I tell like the people that I teach and shit like that. Daily bias run on three principles, bro. Three principles, bro. Liquidity, manipulation, and distribution, bro. And then of course you got your accumulation. But manipulation, distribution, and liquidity. That's how I look at price going into every day. So take a note on this. What I'm about to say is very important, bro. If you don't know this, if I'm bullish and I want to see price going higher, right? Before we go higher, I want to see a fake run lower, running a low inside of a discount before we go higher. So I want to see manipulation running lower. I want to see a fake run lower before we go higher. Vice versa. If I was selling and I want to go lower, I want to see price run higher, a fake run higher, run the buy side, and then we could go run our sell side targets. So in this case, I'm bullish. I want to see manipulation going lower. Okay. And if you look at this price swing right here, we got low, 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 and then low. So no sell side liquidity was ran in that price swing, which for me, I want to see something get ran, right? So let's speed up. Let's go speed up to 9:30. All right. I'm gonna play 1, 2. Right. All right. Now I'm gonna scale down to a 1 minute chart. Okay. So 9 o'clock. This is where we was at 9 o'clock. Right. We came down. We took out this low. You see that? You see how we took out that low? That's our manipulation. Boom. We took out a low, and then we ran back up, and then we broke this high, right? So now I'm expecting this range low to high to hold price. I don't want to see price come back down below this low because this was our manipulation, and then we got a shift in market structure back up and we're bullish. You know what I'm saying? So it would have been different if we would have broke down lower and then held this fair value gap and then traded lower. But we took out the sell side and then broke a high. So we're bullish. So now what do I want to do? I want to see price come back down into a discount. And I promise you this seems hindsight, but it's not. Like literally this is exactly what I did this morning. And I didn't even take this trade. I just had it marked up. This is just what I wanted to see, right? I wanted to see price come down and manipulate this low, and then come down into this discount fair value gap. And you would ask like, didn't you just already say manipulation would happen right here? Why do you want manipulation to happen right here? Because if you look, so this low is at 910, right? If you look here, boom, we took out this low into a fair value gap. We have another fair value gap right here on the 5 minute chart after we came back and ran this high. Okay. And we have another low too. So I still would like to see us manipulate price because it's right after the opening. You know what I'm saying? So a lot of people is gonna think right after the opening we get some big three candles down, not even a lot of candles, but we get a nice rundown real quick into this discount fair value gap, people is gonna probably think that we're gonna go short. Most likely think we're shorting because we've been going high all morning, right? And it's after 9:30, so it's a little bit more volatile than this run right here. After that, you have a nice displacement candle higher. After you got this shift in market structure right here, you will no longer want to see lows getting broken until we hit our buy side targets. You know what I'm saying? So we gave price a chance to go down to our sell side. Price didn't want to do that. Why? Because we took out this low, we broke this high, and we came back down, taking out this low, but we also had a discount fair value gap right here. So just because we took out this low, you can't always think that that's a shift in market structure, because on the daily chart, we are bullish. As long as we have PD arrays that we could trade into inside of that range, then that does not deem shift in market structure. You know what I'm saying? And a lot of people do get stuck on that. Okay. And I didn't even take a trade right here. So I'm not saying I took a trade here or none of that. Another thing that's important right here is our first presented fair value gap. Okay. First fair value gap after 9:30. Our first fair value gap after 9:30. Okay. I'm expecting this fair value gap. Hold on. I'm expecting this fair value gap to hold price. As you can see, price came down into the fair value gap. We held it. The body stayed above the fair value gap. And then the wicks came down into consequent encroachment. And then we got a run above this high. Right? So we still didn't grab our buy side target, right? So you have to think. A lot of people get like, okay, so for instance, we have this rundown right here, right? We got this rundown, price trade into the fair value gap, but we still haven't reached our buy side target. So if I'm bullish and I see all this happen at 9:30 and we still haven't reached our buy side target, but we got discount fair value gaps, you expect these fair value gaps to hold price until that buy side is reached, because we already showed that we didn't want to go lower based off this price action right here. You know what I'm saying? So boom, I'm going to let the shit. I'm going to let this play out a little bit more, but I'm going to speed it up though. All right. So now you're waiting. You're waiting. In this instance, I was waiting for a fair value gap. Even though I have this fair value gap right here, it's not really, I don't really trade first presented fair value gap, but I may look into it. I ain't gonna lie, I may look into it, but I don't really trade first presented fair value gap. I just like to trade when I see price is in order flow. You know what I'm saying? So right now, price is very choppy, but I still have that bullish bias. You know what I'm saying? So what I want to see is displacement in the fair value gap. You know what I'm saying? So, and I'll show you guys what that look like, right? So this is very important what you guys are looking at, okay? So at this time, this is 9:10, right? I call it the 10 o'clock lunch hour. At 10:30, price likes to run the opposite direction liquidity that the daily bias is. So for an example, if we're bullish, price would like to run sell side short-term lows and then continue the run at 10:30. You know what I'm saying? So at 10:30, price would like to run the opposing sell side and then continue to run. Vice versa, if we was bearish and we was selling in the morning, at 10:30, price will run a high and then we keep continuing lower. You know what I'm saying? Watch that shit in your own price, bro. It works, telling you. So at this point, we came and took out this short-term low, but we still have this first presented fair value gap. All right. Now I'm looking for my trade setup in this area, okay? And I'm gonna show you guys how I engage in that, okay? Okay. So boom, going in, seeing this right here, you would think that I missed a trade because I didn't get in yet. But I'm confirmed that our first presented fair value gap is still holding price, which give me clear confirmation that we're gonna go run this high and most likely new week opening gaps high. Okay. So now I just want to wait for a fair value gap entry because now I see price ran a low, and then we got displacement. Okay. So this is where I actually took the trade right here. Took the trade right here. Stop loss was below the bodies. Boom. I targeted a little bit. I target like right there. Right. And let's watch it play out. The reason why I took these fair value gaps too, you would say, why didn't you take this fair value gap right here? We created the fair value gap and then we didn't even think about coming back and trade into it, but instead created two more fair value gaps. That's telling me that this is a breakaway gap. Price does not want to come back into this area because we have these fair value gaps above, and it's still inside. These fair value gaps are it's still inside the range of the shift in market structure. So we got shift in market structure, break above these highs, and that fair value gap is inside of that range, right? So boom, this is what happened. We came in, we tapped the fair value gap, right? And then we came and hit TP for a 3-to-1 risk to reward. So I'm going to show you guys one thing too. 1 second. All right, y'all. So what I just wanted to show you guys is me actually taking this trade. See, this is the same exact chart. We had our fair value gap. We came and dipped down into our fair value gap. I bought this fair value gap and I literally sold at the last candle of this range. Literally at the last candle, right? And you would ask me, bro, how did you sell at the last candle? This is the main point of this video, bro. This is liquidity, bro. This is how you get your daily bias correct. The reason why I sold at that last candle is because that, where the fuck is it? Bro, it was the high end of new day opening gap, bro. Yeah, right here. Okay. I was targeting this high. So I got different charts and shit. These is all new day opening gaps and new week opening gaps and opening range gaps. I was targeting this high. All right. So yeah, that's just me showing you guys that I actually did take this setup. Right. All right, y'all. That was just me showing you guys that I actually took the trade. You know what I'm saying? That was it. But I want to show you guys one more example right here. You know what I'm saying? So if I could just get y'all attention for like 5 more minutes. This is it, right? So this is just on a 1 minute chart, but this is how you can read it as well, bro. This is the same exact shit. Going into this day, right? We had news at 8:30, correct? Right. At 8:30, we came up and ran this buy side, taking out this high, and then we came and dropped down lower, right? Displacement lower, and then leaving a fair value gap. If you watch like the last video I posted, I think I took a trade. I think my video was on this trade, but I said that's ICT's basic 2022 model. Oh yeah, it wasn't my last video. It was my last video where I said I make 6% per trade. So yeah, this is ICT's classic 2022 model. We got a run on buy side. What's important about it is 8:30 news, high impact ran that buy side, and then we got displacement lower, and then we leaving a fair value gap inside a premium of that range, right? So what I was saying in the beginning of the video, daily bias has 3 moving parts to it, bro. So you got your buy side right here that been ran already, but you could still make this buy side because it's a relative equal lows, right? I mean relative equal highs. So you got your buy side right here, and then down here you got your sell side, right? You got your sell side down here. That's the only low that we could run to from here. This is the first one. So we got our lows right there, right? Sell side. Okay. So price right here at 930. You see 930? We got to run higher. And I actually went long on this. So this is what I mean by manipulation. They like to fake people out. I was saying at the beginning of the video, if I'm going lower, I want to see a fake run higher before we go lower, correct? So this was our fake run higher, okay? But what I noticed was when I went long is we traded back into a premium fair value gap, SIBI. And then we got this displacement candle. And then we got another break lower with another displacement candle breaking this low. So we got shift in market structure and a fair value gap. Okay. So now this is important, bro. You want to wait till price show you what it wants to do before you take a trade. So if I'm seeing that it went up to this SIBI and then I'm seeing it break down, then I know our next possible liquidity that we can run to is literally the next set of lows that we got right here. So now what do? I see price break a low, displacement with fair value gap, right? Okay. And I literally took this trade last week. I took this exact trade. So you go short inside the fair value gap. Or say if you didn't even say if you just want to know where price is going and you're not even ready to take no trades yet. You don't even got to know what a fair value gap entry is. You just see after if we have a bearish bias here, which I did, we have our fake run high, and you don't even have to have a bias going into this day. You have a range. You got range from high to low. You got a fair value gap inside of that range, a premium. Price fake runs up inside of that premium fair value gap at 930. 930 manipulation. After that, then you have shift in market structure going lower. Break. We're obviously not going high if we're breaking lows, correct? So where are we going to go? Price only runs on two things: liquidity. Lows, highs, and imbalances. Only those two things, bro. Lows, highs, and imbalances. You know what I'm saying? So in this case, our next set of sell side liquidity was these lows, and price ran into the premium for value gap, and we got a nice run going down into that sell side. So that's how I like to set my daily bias. I like to have both of the liquidities on both sides on the chart. I got my buy side, I got my sell side. Now I just want to react to which one price is showing me that it wants to go to. I did long this because price was showing me that it want to go to this buy side from this run, right? I went long on there, but it also showed me that it didn't want to go there no more after coming into there. So what do? Switch my bias. Boom. It's okay to take one loss in a day and then win a trade. That's all right. It's nothing wrong with losing. You feel me? But that's how you get your bias correct. So if you enjoyed this video, make sure you like the video. And I'm saying subscribe to the channel. If you want more videos like these, let me know in the comments. But I will be doing more of these anyway, you know what I'm saying? So, you know what I'm saying? Just sit back, grab your popcorn, and learn a little bit. I'm going to see y'all boys in the next one. We out.